Hello, I want to welcome us all to another Forex Friday on Tolu Craig Show. And today we'll be talking about the ICHIMOKU strategy, how we can make use of the ICHIMOKU strategy for everyday profit and or for quick profit, so to say. This is a strategy that works. Is a all-in-one strategy on its own. You might not need to add any other indicator to it. For those of us that doesn't know before now, the ICHIMOKU strategy is an indicator system used to assess the market. So we use it to trade basically during trending market. We use it during trending market. All right, so being used to follow the trend, and then we follow through trail profit until we exit the trade and then cash in our profit. All right. So this unique strategy provides trading signals of a different quality. We know that forex trading involves a level of risk. All right. Although with ICHIMOKU, those losses are contained and kept very small. They are kept very minute. Okay. The ICHIMOKU system is a Japanese charting method and a technical analysis method. So we saw that by history that ICHIMOKU indicator was published in 1969 by a reporter called ICHIMOKU in Konyo. That's in China. All right. That's in Japan. All right, and this candlestick trading technique has stood the test of time. So, as I start, as you can see my chart, I am on Euro USD. That's the 30 minutes time frame of the Euro USD. And we'll look at this ICHIMOKU. We'll add it to our chart. Then I will explain to us how to go about it or how to trade using the ICHIMOKU strategy. Okay, now to add the ICHIMOKU indicator, we go to our indicator page there to add. So what we'll do is this is where we get the indicators from. Can we see that F that is there? Okay, so I select it, then it brings me here. So once I'm here, I look for ICHIMOKU. I believe you can see ICHIMOKU here. Okay, so I select it, and then when I select it, it opens this place for me, where I will be able to add the ICHIMOKU indicator. So what we do is that we set it as default. So I've just click on default. So probably you've changed your own the parameters here before. So you just select that default and then click on done at the right top corner. Okay, so it has added the ICHIMOKU indicator to our chart. Now some of us will see this chart and we'll just be like, oh, this thing is looking very rough, it's looking very rough. All right, yeah, that is how it is. Okay, and then what we'll do now is to learn how to actually trade with this and cash in profit. Okay, so let's talk about all these lines, all these different lines that have just been added to our chart, so that we familiarize ourselves with them. The first one that I want to talk about is the Tenkan-Sen line. Call it the Tenkan-Sen line. It's also known as the conversion line. All right, it represents the midpoint of the last 9 in candlesticks. All right, so the Tenkan-Sen line is also known as the conversion line. All right, and then this is it here. This is it here. Coming, trying to select it here. Okay, this is it here. We see this blue line. Sorry, you see this red line here. That is the transcontinental line, or I can say the conversion line. And then we have the other one that is known as the conjunction line or the baseline. Alright, is that blue one that you can see here now. Alright, and then we also have the chill span. Now all these grammars might not really need them. We'll go into practicals soon, but let's just familiarize ourselves. So that is the lagging line. That is this green one that we see here. But for this strategy that we are learning now, we don't need it. So we will remove this line from this, because as it is now, we don't need it. And then we also have the cloud itself. So that's talking about the chill, sorry. Okay, now that's talking about, we also have the cloud now. I've just talked to us about the chill span. Alright, so we also have the cloud. So this is the cloud. So whether it's in an uptrend or in a downward trend, we have the cloud. Alright, so what we're going to do now is that we are going to remove this chill span, that is this lagging line, this green. You notice that this is where the candlesticks are. Why I said we don't need them is that this is where the candlesticks are, and see where the line is forming here. So as it is, this strategy I'm teaching us, we don't need it. So I will remove it from the chart. Okay, so I go to that same F, I go to the indicator. Alright, I select on this so that I can edit the parameters here. Okay, so and then when I get here, what I will do is that you've seen the Chiku span there. Alright, you see it is color green. You remember that the background of my chart is white, so I'll select white so that it will not be obvious again, because I don't need it. I want to remove it from there. Alright, so that is what we have here. It's like you're not seeing it, but it is still there, just that it is white. It has blended with the background of. So I prefer it that way, because I don't need it, so that it doesn't mislead me. Okay, so I go back to go and edit this. I want the cloud. Sorry for that. Okay, I want the cloud to be all shaded. I don't want it this way. Okay, so what I'm going to do is that I will go back to the indicator section, edit it. Alright, so for the up Kumo, which is the cloud that shows it's going up, I want it all shaded. So let me choose like sorry, I'll select fill here. I hope you can see what I've just selected. Okay, I hope you can see what I've just selected, so that it's filled. Alright, so that's it there that I've just selected. Alright, and then the next thing I'm going to do here is that this up Kumo, I want to change it to a color. This color here, I want to change it to a color that shows an uptrend. So I will change it to, let's say, light green. Alright, and then this down Kumo, alright, I'll change it to, let's say, a red or orange color. Alright, so that I just see a difference. I want to use the color that I'm used to show uptrend and downward trend. Get what I mean? Okay, so now I select this up Kumo, I select, let's say, an upward trend, something like that. Then for the downward, I choose something like this, all right, then I click on done. So I believe you can see. So when I see the very light green cloud, I know that it's in an uptrend. Then when I see the very red cloud, I know that it is a downtrend. So that is my setup for this ICHIMOKU strategy that I'm about to teach us. Okay, here are some basic interpretations that we should know. All right, that when the price is above the cloud, then we are in a bullish trend. Do you get that? So these candlesticks are price actions. They are price actions. So you see that when these prices or when these candlesticks are above the cloud, this is the cloud here. All right, so the prices are above the cloud, then it means we are in a, let me delete that. So we are in an upward trend. This is the cloud here, and the prices are above. So it means that we are in an upward trend. All right, and then we need to know that when the price is below the cloud, we are in a bullish trend, or let's say a downward trend. So this is the cloud here. This is the cloud here. All right, and these are the prices. So we see the candles here. We are in a downward trend or a bullish trend. And then when the price is in the middle of the cloud, I'm looking for an example now, then we are in a consolidating or a trend that is consolidating, or we are in a range. Okay, trying to look for one. So we see something like this. You see these candles are forming. They are forming between the clouds. So this place here, it's more like a range. Do you understand what I mean? So we are in a range here. So when this happens, using this strategy, we don't trade at all. We just watch, be patient, and watch what happens. All right. Okay. So for us to enter a buy trade now, I'm going to look for a typical system that works on this chart, so that we enter a buy trade, and then I'll put us through how to enter that buy trade, what to look out for, when to enter the trade, where to put our stop loss, all right, when to exit the trade. Okay, so we are going to look for that now. All right, so that is a good place. Let me look if I can see any other one. Okay, let me use this one here. Okay, so what we look out for is this. Okay, step one, the first thing we do is that we wait for the price to break the cloud. You wait for the price to break the cloud. So you remember that our candlesticks are representing our price action. All right, so we wait for it to break the cloud. So look at this now. All right, this price, this very long candlestick broke the cloud at this point, and then it has opened here. So after it has broken the cloud, the next thing we look out for is to see when there is a crossover between the baseline and the what's it called? I think these are just shown. These are just blocked what we're supposed to see there. Let me delete it. So let me put it again. So wait for this to break. All right, to break the cloud upward. So that the candlestick has just broken the cloud upward. So the next thing to do is to see when the baseline crosses the conversion line upward. All right, so the conversion line comes upward and then the baseline remains down. So in this our setup here, when there is a crossover here, and this is where the crossover is. You see, this is where the crossover is. So as soon as we get this crossover and the crossover is successful on our setup, so what we do is to enter the trade. All right, we enter the trade at this crossover. We enter the trade at this crossover. So the first thing we look for is, number one, you look for the candle where it breaks the cloud. Number two, you consider the crossover. When there's a crossover on the line, I just want us to see it. Okay, so number one is this, number two is this crossover, and then so you enter the trade at this point. You enter a buy trade as soon as you see this crossover, and when you enter this buy trade, you put your stop loss below the candle that actually crossed over the cloud. So this is the point where we put our stop loss. This is the point where we put our stop loss. This particular line, because it is the base of the long candle that crossed the cloud upward, that broke out of the cloud. So you put your stop loss under there, and then you enter the trade from this point here up through, you follow up the trend until there is a crossover again of that line. So have you seen this point where we have the crossover? This point, I'll need to delete everything. So this point where we have this crossover, you stop the trade and then you take your profit and then you exit the market. So you will see, or you will agree with me, that you've been able to ride on profit in this bullish trend from this point 1 to point 2, and then you can measure the number of pips that you have already in this trade. Okay, so that is how to trade using the ICHIMOKU strategy, and it's the same way it also applies to that of a bearish market. That is when there is a downward trend in the market. Let me look for a typical setup so that we can follow along. We have that example before we shut down. All right, before we move on. So this is a typical strategy here. Okay, so you want to enter the trade. You see, we already have a breakout already. We have a breakout at this point. We have a breakout at this point. Okay, we have a breakout at this point. So you continue to check the market, you know, because before the breakout, the red line had already crossed the blue line. So you can just decide to keep it in check. You want to hold on to see what comes out of it at the end of the day. So you follow it through, all right, until that same setup happens again here, just beneath the breakout. So the same setup happens here. Okay, so the red has crossed downwards. So once this red crosses downwards, you enter the market, and then as soon as the blue crosses back, you stop the market. So you are able to take your profit there. Okay, so we are trading a sell, we are going on a sell trade. All right, and you want to check another setup here. Okay, this is another downward trend. This is another downward trend here below the cloud. All right, this is another typical example of a downward trend below the cloud also. So you want to check for, like I explained before, you want to check for, number one, you want to check for when the candle crosses. All right, that is number one. Number two, when there's a crossover of the baseline and the conversion line, depending on what color you are using. For my own, the conversion line is red and the baseline is blue. Okay, you want to check once this crossover happens, you enter a buy trade depending on which trend, if it is bullish or bearish. But for this one, it is bullish. So you enter a buy trade and then you put your stop loss below the candlestick that broke out of the cloud. So this is where we have our stop loss. So when you enter the trade here, at this point, you trail your profit until the crossover happens again in the reverse direction. In the reverse direction, that is at this point. So you exit your trade, and then you bank in your profit. All right. So I hope you've been able to learn something again today. All right. Till next week during our Forex Friday, where we'll come up with another strategy, how to trade profitably, how to trade confidently. All right. Like I've always said before, there is the mindset of a trader, and then you need to be emotionally balanced where you're trading. Don't be in a hurry. You need to be patient. Wait for the set time, the right time to enter the market before you go in, and then be patient to follow your indicators squarely. Be disciplined with whatever strategy you are using. And then, as a disclaimer, make sure that you demonstrate first. Back test all these strategies. Make sure you are okay with it, the strategy that works for you, before you put in your live money. All right. If it's your first time on this channel, don't forget, click on the red subscribe button below. Okay, click on the red subscribe button below and the bell icon beside it, so that you'll be notified when a new video is uploaded. Take note, we upload videos on Forex strategies every Friday. So see you same time. All right, so next Friday, new video. And you can also check catalog of other videos that we've uploaded on Forex. So that's Forex trading also. All right, so thank you for your time. I appreciate. See you. Regards. And I wish us all profitable trading, so you smile to the bank every week. Okay, bye for now.